Cory Bannister. Welcome to the podcast, the Broker Podcast. How you going, mate?
Going well, Mark. Thanks for having me. Delighted to be here.
So I guess, you're the Chief Lending Officer at Trobe, everybody asks me, I know Trobe does both sides of the balance sheet. You take, not deposits, but you pay money to people who put money with you guys, so to speak. And everybody always asks me, oh, have you ever heard of Trobe? Who owns them? What's the story? Who the hell are they? I mean, apart from the fact you are a giant organisation, and I can go back to the days when you guys first started, right, way back. Probably you might not even been born. I don't know. You look pretty young to me, but it goes back a long time. I remember Trobe, and there was a thing there called the Howard Trust, which Challenger owned, which was Howard Mortgage Trust, which the Challenger Group owned, which they bought from a guy called Brett Howard. That's how far back I go. I know Brett Howard. I don't know if he's even still alive, but they set up this thing like a million years ago, and the Howard Trust became the Challenger Trust, which became the part of one of your investment vehicles. So who is behind Trobe?
So you're right, Mark. Trobe has got a long storied career. Trobe's now a credit asset management business. It has over 13 billion in assets under management. We've got 450 staff, and we're a portfolio company of the New York-based Blackstone Group. Blackstone now holds 75% of the business. The remaining shareholding in the business is held by management, but largely by our CEO, Greg O'Neill, whose father, Ray, founded the business back in 1952. So it does have almost 7 decades of operating experience, and as you point out, we operate on both sides of the balance sheet. We've got 2 key revenue growth engines, one being our asset management business, which is spearheaded by our $6.5 billion credit fund. We have 55,000 investors operating in the managed funds sector, so that's a significant part of our business and really the future of where the business sits. The second arm is our real estate credit finance business, which I said commenced in 1952, making it Australia's oldest non-bank lender of size and scale, and currently have one of the broadest product ranges in the non-bank sector. But the core purpose of that particular segment of the business, and it's likely to be what we talk about today, is servicing those customers who are underserved by major lenders. So when, for whatever reason, the banks narrow their lending spectrum, as we've seen recently, we're ready to lean in and assist, and that can include things like the credit profile of the customer, the form of income verification, their age, employment status, or even if I think about today's situation, whenever there's variability or volatility in someone's income and expenses, it typically falls just outside those automated credit decision tools used by conventional banks. So we see the market as, it's often categorized as with specialist prime or complex credit, but to keep it simple, I like to call it conversational credit, which is really those borrowers that typically need a conversation to explain their circumstances, and that's where mortgage brokers play a critical role in our business. They're a key distribution avenue for us, and that's largely because we've got alignment on how we handle customers seeking finance. It's our job to listen, to understand, and where appropriate, to diagnose a solution that fits their needs, and that's exactly what the broker proposition provides. So they're a very close ally of our business.
So I guess probably if I summarise it, not nowhere near as eloquently as you just did, but if I just summarise it, if the deal is a little bit off centre, and you think that the bank won't do the deal for you, and you're a broker, then you better make sure that Trobe is is one of the lenders that's on the aggregation platform that you use, because it's organisations like Trobe that will help your client get set. Now, and the bottom line is Trobe is sort of taking a little bit more risk. They charge a little bit more for that risk, but at the end of the day, it's up to the client whether they want to do it or not. But we're not talking about outrageous pricing. We're not talking about, nor are we talking about you taking outrageous risk either. But clients can get set, because there's enough business in the world, or in our world, in Australia that is, for the banks to be satisfied as to what they need on their balance sheet. There's enough business. So the banks are in this luxurious position to say, well, if someone missed a Telstra payment or someone's 50 plus years of age, we don't really need that sort of business. We got enough business as it is. we don't want that poor borrower to be, feeling depressed because they can't get set. And a good broker will know that Latrobe is someone on their panel that can get the deal done. I mean, is that a fair way of summarising it?
Yeah, it is, Mark. I mean, you're right in saying, the industry needs both the banks and non-banks. The banks do an incredibly good job at, funding highly scalable vanilla customers, and that's where we've seen a lot of, hyper competition in the marketplace at the moment, where the banks are grappling for market share in that vanilla home loan. And you want customers who fit the box and fit the mold to get, quick access to credit as soon as they can. And turnaround times have also been another topical issue of late. We want to see that to go back to normal, and so the banks being able to lean in and do that in a highly scalable fashion is ideal. But importantly, there's a significant cohort of the market that needs that additional assistance. A lot of that can be self-employed customers and small business owners, those that may have had a credit impairment, as I said, volatility in their expenditure. And really ourselves and other non-banks are ideally suited to providing credit appropriately throughout this period. I think, the last 18 months is both for non-banks but also for brokers probably almost the best tool. Somewhat perversely, it's a challenging period and one that you don't want to see again, but it really has the ability to bring to the fore the core value proposition of brokers and non-bank lenders who have got the time to really look at the details of the customer at a granular level and understand whether there's a future there for them, or there's a way forward, or there's a solution that fits their needs. And often that's we're able to source that for them.
So where's Latrobe, Cory? Where's Latrobe now, or whereas in the last, say, 6 months, have you been seeing the demand come from? What type of product? What type of borrower? Probably more importantly, is it around is it around the threshold assessment, the threshold amount on the assessment? Like the 2.5 now moved to 3% over and above the prevailing rate, or is it more around near prime? Like small, like a Telstra bill missing, or is it older borrowers? Where are you seeing the demand come from, and where's the broker demand delivering to you?
Yeah, look, it's interesting. The credit profile of our customers has actually been improving over the last probably 2 years, and in some ways we think we're originating a lot more bank customers due to turnaround time issues that were encountered by the major banks. I mean, and a lot of that was caused by banks have been fortunate, been rocket fueled by government stimulus funding, the term funding facility, which delivered funding to them at just 10 basis points. So they've had a lot of fuel to be able to stoke that fire. But the banks also had a lot of offshore processing issues, whereby due to COVID, whether it be Manila or India or other places like this where there was lockdowns, it was met with increasing volume and a decrease in processing capacity. So we've been the beneficiaries of overflow, where customers really just need a solution quite quickly. So in terms of credit profile, it's actually been improving over time. Where it can go, I mean, we're always good in the self-employed space. It's sort of a strong batting range for us, self-employed small business owners in particular. And we see, a need going forward in a number of segments, whether it's traditional home loans, it's going to be people with credit impairment or some kind of abnormality on their credit profile that falls outside of that automated decision engine. It could be returning expats, job changes, self-employed in particular, who are, incentivized to minimise their reportable income, but for tax purposes. Or they might only have 1 year of financials, the other year's been shut down. So that'll be interesting to see how that plays out. We do a little bit in the...
Yeah,
Sorry, you go, Mark.
Go on. No, go on, please.
No, just, self-managed super fund is another area that we've been getting strong demand from. And that's a good example of a product that performs like a prime loan, and in fact is probably deemed super prime to be the highest performing product on our books, but it's one that is being deemed as non-standard by APRA. It comes with capital weighting for the banks, and it's why they step out of that marketplace. So that's a great example of how we can find a niche in the market and lean in to ensure that those underserved segments still get access to finance. So there's 3 big products.
That super one, the super lending to Latrobe, lending to a superannuation fund is a good one. For me, particularly for older borrowers. at one stage, I remember St George used to be really active in it, as did Westpac. But it wasn't a huge product over more recent years of the banks. But now St George doesn't like it. Nobody really likes it. But there are still plenty of people who want to go off and buy an investment property in their super fund. And for me, I mean, I actually think investing in property is a bloody great outcome, especially if you can get some leverage through someone like the Trobe. So that's a good one. So in terms of like rate setting, I mean, one of the assumptions or one of the worries of a borrower, if a broker's talking to the borrower, is that, oh, well, but La Trobe's going to rip me off. I'm not saying La Trobe, but this type of lender is going to be really expensive because there's no competition. In terms of setting your rates, I mean, do you look at that position? I mean, how is rate setting done? Do you sort of say, look, we don't want to be too expensive, but obviously we take more risk, so we have to be a bit more expensive. But when it comes to self-employed, for example, like a plumber, just explain to our brokers listening that how you set your pricing.
Yeah, so the pricing we have risk-based pricing model. So our price is determined by a number of factors, whether that's the risk grade of the customer, that's the sort of actual credit profile. Also, LVR comes into play. The lower the LVR, the lower the interest rate. And then determining on the level of verification that we get around their income and expenses. So if you're PAYG and you've been at the same employer and you can provide your pay slips, it does present a lower level of risk than perhaps a self-employed plumber who doesn't have his financial statements, but we can use certification from their accountant that yes, in fact, John the plumber does earn 100,000 and he can meet these commitments without substantial hardship. So it's not to say that it's not a high risk proposal at all, but it certainly carries slightly more risk than a full doc loan or a PAYG loan, and therefore it gets a slight increase in the price.
Right. So, and would it be fair to say that La Trobe lends off its own balance sheet? And what I mean by that is off the money it raises, or do you go into warehousing arrangements with the big financial institutions in Australia, probably even around the world? So are you funded externally or your balance sheeted?
All balance sheet. We've got three primary vehicles, and that's a real point of differentiation for us amongst the other non-banks in the country, in that majority of non-banks will use bank warehouse facilities as their primary source to fund the loans, and then they'll term them out through the capital markets through the RMBS programs, and we operate both of those channels as well. What you find though is that the bank warehouse facilities are largely homogenised, and so we're all kind of got similar eligible loan criteria, portfolio parameters and the like, and the cost is thereabouts. So that's why the competition in that space or the structure of those products is very, very similar. Our differentiating factor is that asset management arm of our business, where we've got $6.5 billion on our balance sheet that we can lend to the market, and we do that in a number of ways that differentiates ourselves. So it allows us to go deeper. For instance, a lot of bank warehouses are capped at loan exposures of say 2 to 3 million per customer, or certainly per loan. We can take that out to 25 million based on the size and scale we have with our asset management business, but also breadth of funding. So instead of having to get a commercial warehouse and a residential warehouse and have an RMBS and a CMBS program through the capital markets, we can look to our asset management business and fund things like development finance, commercial loans, bridging loans, construction loans, etc. So that's a key differentiator for us. All balance sheet, and we control a lot of it.
And if I'm a broker and I see the La Trobe product on the panel that the aggregator I operate under has La Trobe on there, and by definition, this sort of borrower that I might be representing as a broker might be a little bit more complex. It might be a self-employed person, whatever. It just doesn't fit the normal, run-of-the-mill type borrower. Does La Trobe have people I can reach out to? In other words, as a broker, is there someone at La Trobe I can talk to? Like if there's a drama, like if I just don't, I might not be as experienced in these types of loans in the past. I might have been putting everything to CBA in the past and it was all good. All of a sudden I got some really good plumber mate of mine who needs some help. Is there someone I can talk to at La Trobe?
Yeah, absolutely.
How do you work that?
Yeah, so there's a couple of channels. I mean, if you're a broker, we'd like to think that you've been allocated one of our BDMs or our client partnership managers, and if you don't, we can certainly get in touch and we connect you. Our BDMs are all credit skilled, so they've got the ability to pull apart complex proposals with the broker on their desk or via Zoom in the current environment, whether that's development finance, commercial, residential. They can do it all, so that we don't have a residential contact and a commercial contact. But in addition to that, we have all our credit analysts are freely available. We make all their numbers available, and they can contact any of our credit staff direct. So you're speaking to the person who's actually signing off on your file. Importantly, though, with all of our products, and again, another differentiator is we've tried to remove the barrier to entry on some of these more niche or slightly more complex products by not having separate accreditation requirements, not having separate application forms or documentation requirements. They're all the same. So if a broker can write a residential PAYG loan, then they can write a loan for a self-employed light doc customer, a commercial loan, even development. And we'll handhold a lot through development as they start out, and we'd recommend that they reach out to us on that front. But we see our role as being able to we're not in the market trying to shift the pie. I think it's a good way of saying it. There's a lot of people in our space. We're saying to broker businesses, we're not just out there to try and get you to give us more of the business you write. We're actually trying to help you write business that you don't even know that exists yet. Once we build that trust and rapport, then our model is that we capture more through service proposition.
So apart from being there to hold our hand, in the event that we have an application, does La Trobe roll out PD days, or do you participate in aggregators PD days? I mean, how do you guys tell us about what you're doing apart from coming on this show? But what do you do normally?
Yeah, certainly PD days and conferences. We're always available. We're across all the aggregation groups, so we're pretty accessible in that manner. We do webinars as well from time to time for brokers on specific topics, and again, we can do that at a state level or a national level. But look, we're really looking forward to getting face to face. We think Zoom's been great, and for a non-bank lender, it's allowed us to be somewhat borderless because you're a little bit smaller, you don't have as many boots on the ground than what some of the major banks have. So it's allowed us to access a lot of brokers, and it's great for regional areas and the like. But certainly it doesn't beat face to face where we can really explain what we can do, because it is so broad and deep. It's hard to get it across in a 5-minute Zoom or conversation.
Which is the reason why brokers, if they're part of an aggregation group and they know that the aggregator is putting on an annual event or even just a PD day, especially once COVID, the lockdown period, you're Victoria-based, I'm assuming, yeah. But assuming everybody gets out of lockdown, you guys might get out of lockdown at some stage. But once we all get out of lockdown, we start holding seminars. What would be good is, I think is a great thing, is for not only that you go to meet your broker mates and other people, but you can actually go to the kiosk at La Trobe will hold, because I know you guys hold them at our events. So there's a kiosk, there's someone standing there, you can talk to them about their products. Someone like Cory will be there at most of these events. You reach out, talk to Cory. If you want to service your client as a mortgage broker, you got to make sure you know where all the products are, where the demand's coming from, and who the dudes are in the joint that you're sending the deal to. I mean, you just have to know these people. And part of this podcast, and I appreciate you coming on here and La Trobe participating in this, is about us taking to the broker market what's out there in the marketplace today when right now they can't get to these seminars. And we want to do this regularly and say to people like you, Cory, what do you want to say to brokers today? I mean, what words of, let's not call it wisdom, what's a current modern update as to where you see the broker industry today? What would you say as La Trobe? So
I would say this, that the broker proposition has never been as strong as it is in the current environment, where there's complexity and confusion. We see opportunity, and I'm sure you share the same view, Mark, being entrepreneurial, and brokers likewise. We can see through the numbers in the industry that on the residential side, brokers are doing incredibly well. Almost 60% market share. In the June quarter, they settled almost $80 billion, which is fantastic. But what we can also see is on say, the commercial side and in other areas of their business, there's so much opportunity that's unfulfilled, where it's going direct to lenders or direct to major banks. And we think that brokers have got a huge opportunity in front of them. And the days of being a residential broker or a commercial broker, I think, are numbered. I think, these businesses now need to solve more problems. And our position in that is that we understand that there's so many different lenders and so many different products out there in the marketplace. So we've purposely positioned ourselves to say that we can offer a solution, a bank equivalent solution, from almost anything from your first home buyer residential loan to live doc loans, business building loans, commercial loans, development, rural, self-managed super fund, expats, non-resident borrowers. I mean, you name it, we've got the mortgage space covered between residential, commercial, right up to 25 million. So if it's on your desk and you're not quite sure, just give us a call. And that's part of our model as well, is, we love to have the conversation with you, and we'll tell you very quickly whether it fits or it doesn't. There is no black box. It's a human at the other end of the phone that you can talk to, explain the situation, and they're all highly skilled and can say, yes, Mark, that's actually something we can do, or maybe it's not quite there, but here's another way that we can structure it. So that's our benefit to brokers. And we call out brokers that where they're unsure of things that are on their desk, don't pass them to somebody else, because you're inviting another broker to take your client. At some point in time, you want to be able to solve all of their financial problems and give them advice right across the stack.
I like that. Cory, I think what's really good about what you just said is you're trying to expose and or encourage brokers to, in the game of efficiency. And that is, if I spent the time to get the client, it's better for me to do everything for that one client than to go and try and find 50 other clients, because it's the time getting the clients is the most inefficient period, because it's hit and miss, and it's a low percentage hit rate. So if I've got a client, then I've got to make sure that I can satisfy the client in relation to all their borrowing needs, whether it's commercial, super, residential, etc. And what you're saying is La Trobe is playing in that game. That's the territory La Trobe wants to be in. So La Trobe wants to make sure that they can help the broker become more efficient by offering a full suite of all the products. And by the way, the banks ordinarily don't, because whilst the banks will offer commercial loans, the banks don't offer commercial loans to all people. And what I think La Trobe is saying here, what Cory is saying here, is their game plan, their strategy is to make sure that they cover off all these things. And it's not just a black box. You can get on the phone and talk to someone, which is rare these days. It's old school, but it's rare, but it works. So Cory Bannister, Chief Lending Officer from La Trobe, I really appreciate your time. I really think, to be honest with you, I think that, and I'm talking to all the brokers now, I think you should be taking a lot of notice of what Cory's talking about here, and make sure, whilst La Trobe may well be on the panel, make sure you become much more familiar with La Trobe's products, because it'll get a lot of clients approved probably more quickly than they would ordinarily feel as they're going to get done by the majors. Not taking anything away from the majors, by the way, but it will do that. And it's not like you're going to be paying ridiculous premiums over and above it if your client has got pretty good credit. It doesn't mean the world's best credit, but pretty good credit. So at the end of the day, your client will pay the interest rate that their credit determines. That's how it works. That's how it works in the world today. So Cory Bannister, thanks very much. Really appreciate this. And this stuff's getting rolled out to our broker community, and it's important they familiarise yourself with La Trobe. Cool, man. Thanks. See you at the next seminar.
Will do, Mark. Look forward to it. And thanks again for having me. See you soon.
Thanks, mate. Bye-bye.